So when we talk about human rental abolition, what we're really trying to abolish are labor markets everywhere. So just as slave markets were invalid because it involved the sale of people, rental markets or job markets are invalid for the same reason. People can't rent their labor. They could be a member of a business where they have responsibility for the profits and losses and where they have a say in the business, but they can't rent their labor. So the job markets that we traditionally think of when politicians say jobs, those are actually what we're fighting against. What we mean by real jobs are membership in a worker cooperative. So we can see what the marvel of modern finance is today. It's the securitization of labor through the stock market. So now when you buy a share of a business or a corporation, what you're buying is you're buying the future value of every employee of that business to infinity. So that every person that rents themselves to the business, you already own the value of their labor. And this is what we're fighting against, because we realize that only those employees, the members of any business, should have a right to those profits at the time. In the same way in a worker cooperative, it's the current members that have a right to the profit of the business now or in the future. What we're really looking at are some ideas about ownership and what's really meant. And for conservatives who are very concerned with ownership, what should be a primary concern is whether new products are appropriated correctly in the first place, because ownership is meaningless if the wrong party appropriates stuff in the first place. And the correct party to appropriate things are the workers, the members of a firm. So if we're really concerned about private property rights, this should be the main focus. In the same way, when people talk about ownership in the sort of traditional case, what they're not talking about is ownership of one's own labor or self-determination. What they're talking about is owning other people's labor. But real ownership means owning your own labor. This is the fruits of the labor argument. And this gets back to core ideas about ownership, self-determination, and democracy, which underlie not only the economics, but the politics. In the same way in politics, where you can't buy Canada, for example, there's a very distinct understanding that people are sovereign and you can't purchase governments. Not that you shouldn't purchase a government, that you shouldn't buy Canada, but you can't do it because the contract would never be valid in the first place. And it's a little bit of a subtle point with the language, but take slavery again, for example. The slavery contract should be understood to be invalid inherently. Now, we're not saying that slavery in practice didn't exist. Of course it existed, and this is what we're fighting against. But the slave contract could never be fulfilled. So if you're asking what is the value of owning a slave, the value is zero, because the slave could never sell themselves in the first place, and you can't have ownership in the first place. In the same way, we're arguing with human rentals that the rental contract can't actually be fulfilled. People can't actually alienate their responsibility. All that can happen is that certain financial transactions can take place, and the legal or social system can pretend that those actions fulfilled the contract, which is what's done. But this is sort of the beauty of the institutional fraud, is that it's not so difficult, or it's not so easy to see and to cut through. And the issue at stake is whether people can actually vacate their personhood. Can the slave do it? Can the employee do it? Or can the subject under a dictatorship or a monarchy do it? And the answer very clearly is no. They can't do it in any of these cases. So if we want to reject human rentals on a theoretical basis, we have to reject the notion that people are in fact responsible for their actions. We have to reject the basis of our entire criminal justice system, any consistent theoretical basis for political democracy, and any arguments for the abolition of slavery, because these are all essentially the same argument that's being made. And it's not an argument about the conditions of the worker specifically. It's an argument about the inconsistency of a contract which seeks to shift personhood from the employee and make them a tool of production as opposed to a real person. And we understand that this can't be done. So if you're starting a worker cooperative and you need financing, what do? There's a few options. One, if your members are wealthy, you can contribute the capital yourselves. This is sort of a rare case. Two, you could borrow money from people you know, family, friends, or financial institutions, though that's very difficult for startup purposes. And there are several funds set up to lend to worker cooperatives. There's a national fund called the Worker Ownership Fund, set up by the U.S. Federation of Worker Cooperatives. And this is dedicated to financing worker cooperatives. It's hosted by the North Country Cooperative Development Fund. There's another fund called the Cooperative Fund of New England. They also have an associated fund called the Cooperative Capital Fund of New England, which does subordinate lending. And there's the Local Enterprise Assistance Fund, which is associated with the ICA group. All of these funds are, well, two of the loan funds are about $10 million. The Local Enterprise Assistance Fund is about $1 million. So they're not huge funds. The bigger fund, or the bigger institution, is National Cooperative Bank, which now goes by NCB. They're a $2 billion institution, but they only do minimal lending to worker cooperatives. They primarily serve housing or real estate cooperatives. So if you're a small worker cooperative, they're not really the right entity to go to. And this is part of the reason that we're trying to set up a credit union for worker cooperatives, is that worker cooperatives are sitting on a lot of assets, mostly in financial institutions which don't serve their needs very well. Mainly traditional banks, which don't understand the worker cooperative structure and are, for those reasons, unable to lend to it. And the sort of typical example is when you go to a loan officer of a bank, they ask, well, who owns it? And they say, well, we all own it. And who's in charge? And, well, we're all in charge. And those aren't the right answers from most loan officers' perspectives. So it's a big educational effort. But all these assets that worker cooperatives have that are tied up in these institutions can be more effectively utilized in a credit union, which understands worker cooperatives and will lend that money back into the community. And this is the goal of the credit union, is to tap these assets which are there but aren't effectively utilized at this point.